Hey, what's going on YouTube? Kenny here. So today we're going to take a look at entry points. So how to get a good entry point, things that you should consider, what you can look at to help you guide the way, and whether or not you should catch falling knives and all that stuff. Okay, so this is going to be an interesting one, but instead of doing a very highly curated one, you all know that I like to use real life examples. So we're going to take probably just the first 10 stocks here that I have on the right side, and obviously you can't see it, but we'll just go through the kind of laundry list of stocks and just kind of work our way through it and talk about some sensible ways to do it and kind of my strategy. So if you didn't know, there's many different ways to do it, of course, but this is just some of the things that I look at. And remember, the thing that I do and the way that I do it is typically to try to simplify as much as possible. And so given that, just realize that I'm giving you a very general abstraction of my overall strategy. So if something doesn't make sense, just ask the question on the chat below, or not the chat, I'm sorry, on the comments below, and I'll try to answer them. Okay, so the first thing we'll take a look at is this is actually Mara. So Mara is a Bitcoin mining. It doesn't matter. What we're going to think about is a couple things, okay? So again, if you've never read a price chart before, the thing that I would have you say is don't think of this as, if you're trying to guess, okay, if you're trying to use the psychology of money, try to guess, think of these as people in line, okay, waiting for ice cream cones or to buy the stock or whatever, right? As time goes on and it goes to the right, you know, that's generally how long or how much misery somebody could be in, or on the other side, how elated they can be. So this often will make a stock very liquid because everybody's buying and nobody's selling, right? So when I talk about misery, it really is a defining factor, because what you got to consider, right? If you look at here, for instance, if I bought Mara here, right? So say I bought Mara right here, right? This is, let me take a look at how long this is. Let's measure. From here to here is 1 month, okay? So there's a couple things you want to look at. If institutional ownership is like 70% or something like that, and then you can find that in Finviz. Actually, we'll just go and show you. Down here, you can see institutional ownership is at 6%, so very, very small. And the reason why this is going to matter is because it's retail money. So when it's retail money and individual investors, this is important. The pain thing is very important to these kind of stocks. So the thing to think about, in my opinion, not a financial advisor, et cetera, et cetera. So we had 30 days pretty much of not sideways action, but people in misery. So this whole cohort is in misery. And so what you got to look at is how much volume came in, right? And you can do that a couple ways. You can just click on this and you can see over time. This is TradingView. You can get it for free. But, you know, that said, there's 30 days in which somebody has held this position, all right? So saying that nobody has sold everything, right? There's a bunch of people here that want to sell really bad. So that's why when you do something like this, see this little resistance line I drew, right? So once it hits here and it comes back down, I drew this line, right? So here's the important part of that line, right? And this is another thing about entry points when it comes to volatile stocks. So check it out. Because we know retail money is here, and we know there's a lot of pain here, and I mean, this is a lot of pain, guys and girls. I mean, this is 41% retracement. So if you didn't sell anywhere up here or over here, you're hurting, okay? So if you do have diamond hands, right, and you get through this little trough right here, when you come up here, here's the first thing about of entry points, okay? Always buy on support unless you're doing a momentum trade. So this would be a momentum trade, right? So if you're doing a momentum trade, and this would be exactly what a momentum trade is, excuse me, for those new here, we do everything in one take, so apologies for that, but you know, it's not highly curated, but you're going to get the real sense of what we're trying to think about here. Okay, so again, if you look at this, right, so remember, we were in pain 1 month, right? So once you get here, right, if you're going to take a momentum trade, This is actually where you would want to get ready to take and short, right? If and only if it bounces back, because if it bounces back, you're definitely going to probably see like 17, 18, this price level over here, right? So here's the deal, but you still draw this line. Why, right? Because if it doesn't double top and do this, as soon as it breaks clear of this, and everybody's threshold is different, everybody's risk tolerance is different, but if you're day trading or doing a momentum trade or a momentum swing trade or even intraday trade, I would argue as soon as and you can see my gray line here. So for me, my tolerance was about 5%, just based on the volatility of the stock. And you can calculate that a bunch of different ways. Use your own strategy, develop your own strategy. So here's the deal. If you do that, right? So as soon as you break here, some people would get right in right here, right? But, I don't, because sometimes, it just goes back down. And here's the deal too. You see how these lines, my lines aren't like razor thin or anything like that, because you don't want it to be an exact precise line. Don't use those lines precisely. You just kind of look at them and kind of gauge how far, based on volume, based on how fast things are going. But anyways, my point is, based on that, this would have held in just, almost going into it. And I'm sorry, this would have held going almost midday, right? And we would have broke. Okay, let's take a look here. We break here, right? Okay, so we break here at $30. As soon as we break there, I'm getting long and I'm going in, right? And this is my swing trade, right? But look, you can see, because we have confirmation of this break, right? This is a break, okay? And again, you have to determine this based on whatever algorithms or strategy you develop. How I develop it is based on volatility, right? So whatever the volatility of the stock is, I kind of use that multiple to align with, how the chart is trading. And because of that, I can say, okay, as soon as it breaks 30, I get long and I go up. And whatever that trade looks like for me, and I can go ahead and hold. Here's the second part of this. Okay, so now, not a momentum trade. How do you catch a falling knife? So you can see it as it came back down. A lot of people may have marked, a lot of people would have marked here, right? As it comes down as a line, right? And, as you're coming down, and if you want to catch, always, again, so the rule is, if you're doing a momentum trade, go for the break, right? But if you're doing a catch a falling knife trade, right, as they would say, okay. So that phrase can be used a whole lot of different ways. I'm not actually telling you to catch a falling knife. There is some thought and some forethought going into this. But my point is, if you would have picked that line as a support line, you wouldn't have gotten this, right? Okay. If you would have did what I did, right, and based on the volatility of the beta of the stock, okay, how it's trading relative to the rest of the stocks in the stock market, and you assign that multiple, I get $30 as a price or as a point of support / resistance, right? So as it comes down here, I am able to capture that. I mean, I didn't trade this, but I'm just trying to show you that I was able to, if I was using my strategy to capture that. How else could you have captured that, right? Well, you look in here, I use the simple moving averages, right? So these are also support lines. This is a simple moving average for 50 days, 100 days, and 200 days. I would not have gotten that because it wouldn't have touched even the 50. But this is something you could use. This is something you can use. This is something you can use. You have to try to figure out which one works best for the stock specifically. Some stocks, a 50-day moving average is going to be money. Chef's kiss is going to work every time. And some, nothing will work. So just go ahead and consider that. So if you are trading, if you are looking at that, do that. If you want to go for a stock that you're just not sure of and you want to very, very much simplify, all you do is just run a support line against the where most people are buying or selling. So for instance, a true support line for me here would be around something like this. So even if you take a look at this, and the reason why you're looking at this like this, And again, for me, everybody knows horizontal channels are like my favorite. But the way I draw this and the way I look at this is, this is straight up a mean reversion line, right? I'm going to consider this noise. This is too far outside the standard deviation. Anything below this is too. Now, it's coming from 2021 over here from the new year. But I would say that this is the actual kind of pulse, right? And actually, if you want to do this right, you want to go to logarithmic and take a look at it. Okay, so yeah, exactly. It's still the same thing. And then that's noise, and this is noise. So what am I trying to show you here, right? What I'm trying to show you is if you're riding the middle, unless you're doing options and doing iron condor, there's no reason to play this. Because if it's riding this much, here, you wanted to put a, oh wow, actually no, never mind. I'm sorry. These moves are big. That's 30%. This is the 1 hour. Let's go to the 15-minute chart to show you. Okay, so if we go into the 15, same thing, right? This little channel right here. But the point is, you wouldn't want to, buy when it's running close to this channel, right? What you want to buy is down here, right? And this is just my strategy, right? So you say, Kenny, that's ridiculous. It's never going to get down to $11, right? That's fine. Then I just won't buy, okay? So that's how I play these super volatile stocks. Okay, let me go to one that may be a little bit more sensible, just to give you kind of another kind of idea. So this is GM. This is really not, well, I mean, it's sensible in the sense that it's not going up a crazy amount. But again, just making sure you're on logarithmic. As you can see here, this is the channel. Oh, I guess I should start with this. I should have started the video with this. All right, if you're day trading, intraday, if you're day trading, you should be using the 1 or 5 minute candles. I use the 15-minute candles as entry points, but I use the hour to zoom out and take a look at things, right? And sometimes I even take the day. But when I'm actually trading or swing trading, if I'm taking positions anywhere from a week or better, I'm on the 15-minute candles. We'll go over that another time, but I just want to talk about entry points one more time. So here's GM, right? And if you take GM, and I don't want to take this line, but let's just use the simple movement averages. So if you didn't know what the simple movement average is, it's a trailing indicator. So it's an indicator based on time that's already happened, and it's just showing you what the average price is for the last 100 days, 50 days, and 200 days. You can also use the EMAs, the exponential moving averages. All those do is have a recency bias assigned to them, but based on the things that I'm using, it just complicates kind of my algorithms, if you will. So I don't use it. I use the SMAs, but you're welcome to use the EMAs. What it does is it turns faster, right? So simple moving averages turn a lot slower, which is fine for me because all I'm using these for is a baseline, okay? So if you looked at here, right, the best way to play GM, if I'm looking at this chart, just this part, I'm not going to really re-examine it and actually do a data scrub or anything like that. But I mean, if I'm just taking a look at this, right, I just take a look at where it bounces. So here you see it bashes through the 50 and it bounces off the 100. And again, it goes right through the 50 and it bounces on the 100. All right, and we get another bounce on the 100. Okay, here it bounced on the 50. Here it went right through again. Right through the 100 this time and right through the 200. So this is what you would call bearish signal, right? Okay, so how to get back in. So if you're saying for GM, if you were riding this uptrend and not going through the bear, what you would want to do is you probably say, okay, GM really likes to respect the 100-day moving average. So if it doesn't respect it here, it's definitely bearish, and it was, right? So it respected it very well. I'm just using this as a small case study. I'm not saying that this is enough data to tell you one way or the other. I'm just showing you. All right, now, here's the other point to this. Okay, Kenny, how do all the traders do it? The way that traders, most day traders, swing traders, short-time swing traders do it is they actually take a look at the crossover. There's a bunch of ways to do it. So once you get this Once you're underneath all this pressure right here, so you're underneath all the moving averages. So here, these guys, you're underneath there, you're under pressure, right? When you cross back up and over, it's like you're coming up for breath, right? So you're taking some air, okay? What most people do is they'll use the 55 EMA or 50 moving average or something like that, depending on what chart you're looking at, what candle you're looking at. For me, I aggressively, well, here's the thing. I use a bunch of different ones, but let's say for GM, you can use the 50, for instance, and what you want to do is once it clears it, you have to make sure it clears it with conviction. And you're like, Kenny, what's conviction? Again, remember, every chart is different. So conviction here is 3%, but that's actually really ridiculous for GM. But the point about it clearing is, one, for me, it has to clear with conviction, one, and then two, there's another piece, right? Another piece is it has to hold for 1 day. For me, it has to hold. It can't just go down after hours, and I'm just not believing it. So I don't even enter here on this first day, even how strong it is. It has to hold for 1 day. Even if it goes sideways 1 day, I'm fine as long as it holds for 1 day. This is not for every stock. Again, every stock works differently, but I'm trying to tell you in general what I can do with a pretty decent amount of reliability depending on the stock. And you should test this out for yourself. You cross over the 50, you hold for 1 day, you get long here, and you ride. And you see how you don't cross the 50, and then even here you bounce, and then you sell here, right? Because you're breaking down over the 50. So you would have gotten 30% on that one, right? And then you would have got nice and clean. And then let's do that again, right? And you come back over. Oh, you crossed over the 50. You held for 1 day. Boom, you're in, right? So here we cross over the 50 with some conviction. You held for 1 day. Boom, you ride this up, and then you get out here, right? So what would you have gotten there? You would have gotten 4.5%, right? 4.19%. It's not a lot, but I mean it's a winning trade, right? Big winning trade here, small winning trade here. And so that's how I would do that. Okay. Where are we at? Oh my gosh, we're at 17 minutes. Okay. I went really long on this one again, so we're going to go ahead and stop. I had a bunch more to say, but obviously I had no idea how long this was going to take. So, dang. Apologies for going so long. I didn't realize it was going to go that long. Okay, so check it out. I'm still shilling my innovation lab for a little bit longer. I want to get a couple more folks in. We have a very good list of folks, and I think it's going to be really interesting. We'll see how it plays out. I don't know how it's going to play out, but I'm very interested to see how it's going to play out. If you want more information, go to our website, redcliffresearch.com, and click on the Innovation Lab tab and go from there and see if it's something that interests you. And if it does, I will send you a big, long email, if you're accepted, and, basically telling you about what we're trying to do and, what's involved, the commitment, etc. The thing that I'll tell you right now is, you can't buy your way in. The only way that you can get the research or get the things that are the deliverables of the Innovation Lab is if you join the Innovation Lab. So I'm just trying to build a community. The biggest thing is we're trying to find people who are just want to talk about stocks, even if it's just a hobby. And I know that, not everybody does it forever and lasts a long time. But if you're just interested in that kind of thing and you want to contribute some time or some of your expertise, you might be good at one thing or another that somebody else is not good at, or you might be like the hunting fishing guy and we're looking at, Academy Sports or whatever. I keep using that example, but you get my point. Okay, so enough of me. I will see you tomorrow. Take care.